Why 80% of the middle class is starting to go poor. What is happening in real estate? Real estate is starting to crash, as we called many months ago. The stock market is still getting slammed. Bitcoin's at $16,000, and millennials are not starting to save money anymore, and they're not investing and using all the right financial education they need to get ahead in life. As always, thank you for joining Brotherhood Finance. Thank you for stopping by our YouTube channel. We're going to dive into this instantly on today's video. Make sure to smash the thumbs up button, subscribe to our YouTube channel, and leave a comment down below about all of the stuff that we're covering. Why is 80% of the middle class going broke, and why are things happening that are really tragic in, really the whole economy as a whole, and where do I predict them going? We're going to dive into all that right now. Brothers, let's dive into this right now. Now, first up, skimming U.S. housing froth, a delicate dawning task. Now, we're going to address real estate real quick. Again, U.S. home prices appreciate a remarkable 94.5% from the first quarter of 2013 to 2022, a 60.8% rise after adjusting for inflation. The magnitude of increase is even larger than that of the preceding housing boom from, again, 1998 to around 2007. Now, why is this important? Is because home prices have risen especially rapidly since the pandemic. Again, they printed all that money, it got into the system, and when that occurred from the first quarter of 2020 to the second quarter of 2022, accounting for roughly 40% of the decade-long appreciation. This goes back to what we were talking about before. Again, home prices are too high and interest rates too high. There's going to be immense opportunities available really just in the real estate industry here soon. Things are going to get much worse. Great opportunities will be presented as well. Now, this chart shows price to rent ratio, price to income ratio, and real housing prices. Over 95 is considered exuberant. And as you can see, we are way above that in every single metric at 104.8 in price to income ratio, at 108.7 in price to rent ratio, and real housing prices at a 125, which is far above that 95, which is showing again that it's very exuberant. Now, this is showing cumulative percentage change in the number of households. Again, if you look at this chart on Zillow, this is showing, the total owner and renter. Renter has continued to increase quite substantially over the coming years due to the increases in prices, and people just can't afford living in a home any longer. High income households have driven most of the growth in renters since 2010. Again, this is showing a lot of people are renting. Now, as far as the housing market goes, just a couple months ago, if not a year ago, you could get a 3.5 interest rate on a $400K home, which would be about $2,300 a month. Now, if it's $550K and the interest rate's 5.5%, it would be $3,500 a month. Not to mention, obviously, the costs and everything associated with it have also gone up quite considerably. And not to mention, national rent trends level and percentage change is also starting to go down year over year. So again, people are not renting as much, it's starting to go down, and really the start of the housing market has started to collapse, which we predicted a while ago. And for the first time ever, apartment demand stalls out in Q3 as new move-ins slow more than expected for the first negative quarter 3 in 30 plus years. This is the data they won't show you. This is the stuff that you really have to crunch and spend a lot of time to find, but it is right here in this picture. Quarter 3, for the first time in 30 plus years, the first negative apartment demand in a long, long time. It is going to start occurring more rapidly and more accelerated than you could ever imagine. Not only are home prices going to drop quite substantially, but apartments, commercial real estate, multifamily, it's all going to crash quite considerably. And if you have cash, it's a perfect time, a once in a lifetime opportunity. I think this could be as bad as 2008. A lot of people don't believe it. Time will tell. Now, next slide. Year over year rental price growth will rise from 5.8% as of June 22 to 8.4% as of May 2023. That's what the Federal Reserve Bank of Dallas says. No, I don't believe that, quite frankly. Based on the numbers I just showed you, it's already starting to transition. So, what else? Why is this important? Why do we actually want to see this occur? Well, shelter accounts for 32.5% of CPI. Again, Consumer Price Index. It measures all the products, goods, and services sold in the U.S. So if we see shelter finally start to go down in price, inflation starts to go down, then they don't have to raise rates. then the Fed is actually essentially finally doing their job and getting inflation down, so therefore things aren't as expensive and we can finally reach a market bottom. Again, I don't think we're going to have that till late 2024, but this is a good sign that stuff's starting to go down, and it's everything that me and the other, me, Brendan, and ColeNichter, the other CEO, predicted, quite frankly. Now, nearly half of landlords with over a year in the business increased rent by more than 3% this past year, and 48.7% of survey respondents who have held their rental for over 12 months told us they increased rent by greater than 3%. Finally, I think this will start to come down. But again, this just shows how inflated everything is, with 40% of the gains coming in the last 2 years for home prices, and with obviously rent increasing substantially as well. Now, let's talk about millennials. The housing market's starting to collapse. We went over some numbers. We talked about how it's going to drop gross domestic product, how people are starting to rent less, and the demand is starting to weaken for the first time in 30 plus years. And obviously interest rates are way too high. I need to consider that as well. Those are the key points. Next part is millennials. I am not a millennial, I am a Gen Zer, but the point of the matter is young people are not prioritizing saving money. And the reason that is because, well, everything's just more expensive. People want to live in the moment, but we're going to address this and give you my opinion on it. Now, again, 55% have stopped saving as mortgage rates jump up back towards 7%. And not only that, but workers are scaling back 401 contributions. Now, if you've watched Brotherhood Finance, most of the time you want to do the opposite of what everybody else is doing. When everybody's buying real estate, it's a bad time to buy typically. When everybody is contributing to their 401k, it's not really a great time to do it. But as for me, obviously I'm a long-term. I like the Roth. I like the 401k. Obviously, real estate is still probably the best asset vehicle as far as building generational wealth. But at my stage in my life, I'm almost there, but I'm not there. I have some obligations I have to fulfill first. And then once I get into real estate, I'll be very excited in mastering that craft as well. Good news is the other CEO is a real estate agent and has great knowledge. Now, workers are scaling back 401ks. That should not occur. Actually, they should be increasing their 401k contributions because, again, you want to buy low and sell high, but most people don't have the right frame of mind. Now, this image is showing kind of where people are saving and spending money, and the red right here is dictating. Obviously, when people are from 20 to 30, they're spending a lot of money. They care about materialistic things, and then eventually, finally, they start to save money. Now, obviously, you don't want to just save money. You want to earn, keep, and then multiply your money, because saving does nothing nowadays when they print money out of thin air. Actually, about 57 to 60% of every US dollar is printed in the last 2-3 years. So you want to be able to earn, keep, and then multiply your money. But this is kind of showing you that, people are spending more money when they're young, and then they're starting to save more money anywhere from 35 to 40 to obviously the 55 to 65 area when they're getting ready for retirement. But the sooner you start, the more it compounds, the higher return on investment, and, obviously the better retirement you will have, most likely, just by investing and having your money grow on top of its money and compounding. Now, 75% of middle-class households say their income is falling behind the cost of living. This goes back to the title of this video, where roughly 80% of medium wage incomers in America are going poor. Now, the reason this is because CEOs are getting paid a lot more and workers are getting paid a lot less, and I'll show you that in these next couple slides. But not only that, but you have the price of goods and services increasing substantially, and not only that, but although the prices are high, the prices of groceries, the prices of vehicles, not only that, but the interest rates are also high. So it gets the poor poorer and it gets the rich richer. The banks, all the institutions, all the CEOs, they're preparing for this. They know what's about to occur. It's going to be a big crash. But nevertheless, in 2019, from a CEO to an employee, the difference was 264 to 1. Last year, the average was 299 to 1 in 2020, and now it is 324 to 1. So on average, the S&P 500 CEO makes $26.1 million a year, which is a 79% increase, or 872 times the average earner. Again, we're talking about one person. And again, the average income for an Amazon worker is $32,855, while the CEO makes $212.7 million. So where is inflation really hurting somebody? Is it the average income earner making $32,000? Or is it the CEO with a, 79% increase, making $2.12 $2.7 million. So that all goes back to, again, why this is hurting the poor and the middle class and why the rich are getting richer. Not only there is more of a wage gap now than ever in history before, and it is a terrible problem, my friends. Now, why is this? Well, non-financial corporate business profit after tax. If you see right here, we are at the highest point in all time when a corporate business makes profit, and that's why they're getting those big raises. Now, look at this. CEO pay for the S&P 500 CEOs was actually greater than the profits as far as percentile of increase, while real workers' wages was negative. So this is, you start to see the recurring problem here. Now, how can you actually benefit from this and actually go get an increase in pay? Well, you just need to change your job. You need to go find a better job to make more money. And that's what statistics have shown on 12-month average is the percentage of U.S. workers who saw a real wage increase over the same month a year earlier are changing jobs. So jobs are earning more as a result. Obviously, from a new employer, again, 60% increase here, 51% increase from April 20 to March 2021. And obviously the 60% increase from April 2021 to March 2022. Now, Elon Musk, what does he say? He says, Tesla CEO Elon Musk says inflation has peaked, but we'll have a recession for 18 months. That's about kind of where I predicted. Late 2024 is my opinion. And the Fed plans to shrink its balance sheet quickly, which they've already started to do. They have been doing, such as treasury bonds, such as, selling some of the stocks that they bought. And they really have to get inflation down. They have to get money velocity down. Too much people got money, and then that money transfers to somebody else and to somebody else. That is money velocity. When you buy a good service and then it just keeps moving onward, they need to slow that down to slow, obviously, inflation and to get GDP back, get jobs back, and the price of goods and services. So obviously, as we just mentioned, the Fed plans to shrink its balance sheet, which they have been doing. And as I just mentioned, obviously, the outright in trillions of dollars as far as treasuries, they've started to sell. So that's important to keep in mind as well. Now, again, if you want any additional information or you've watched this far, please make sure to smash the thumbs up button, subscribe to our YouTube channel. Check us out on our social medias on Instagram and TikTok. And if you want to actually learn how to earn, keep, multiply your money, what one of the best real estate agents in Florida is doing as far as buying property, what to look for, as a realtor himself, go check out our course on building wealth in real estate at brotherhoodfinance.com. You can use code BCooper10. And also, if you want to learn about cryptocurrency, it's going to be literally the money of the future. Technological advancements over time have shown how the internet and how really things have transitioned at a rapid rate. So if you want to learn about that, go check that out. We have one called Investing University. We have Financial Fortress, with which bundles them all. I'm not selling you anything, but if you want to really learn how to profit from this recession instead of lose a lot of money, that'd be a great place to start. As always, brothers, I appreciate you watching this video. I hope you enjoyed it. Leave me a comment down below about how 80% of the medium income workers are now starting to get poor or not earning as much money. What's your opinion on that? Do you think the real estate market's going to continue to crash? Again, it's going to crash quite more substantially than I think most people can interpret or realize. And cryptocurrency, obviously, speculative asset vehicle, going to continue to get hit even more. It's very new, it's very speculative, it's very volatile. It will bounce back. I still think it has a very promising future as far as the future of the financial markets. Stock market, going to probably continue to sell off quite substantially. Probably another 20-30% from now. Mid to late 2023, things are going to really feel like we're in the midst of a recession. I think we'll come out probably right before 2024 or mid to late 2024. So we'll see how things go. Hope you enjoyed the video as always. Have a great rest of your week, a great rest of your weekend. And if you have not done so, please smash. Smashing is important. Subscribe to our YouTube channel and leave a comment. Much love as always, brothers. Thank you very much. Peace.